to NAIA COVID. I just started, Vince, just so you know. Welcome to the COVID industrial real estate market in Northeast Ohio. I'm Amy Whitaker with First American Title National Commercial Services and the chair of the Strategic Initiative Committee. I'd like to acknowledge and thank our 2020 gavel sponsors, Platinum, RSM US LLP, Gold, Cushman Wakefield, Cresco Real Estate, Dollar Bank and PNC Real Estate, Silver, Cohen & Company, First Federal Lakewood, Marshall McLennan Agency, Porter Wright Morrison Arthur LLP, Retzel Walter Haverfield LLP, Bronze Sponsor, AECOM Hunt, Akron Cleveland Association of Realtors, Ariel Ventures LLC, ATC Group Services, Bellwether Enterprise, Duffy & Duffy Cost Segregation, First Financial Bank, Geist Companies, Intertech PSI, LaBelle Associates, Marcus & Millichek, the Middlefield Banking Company, Ohio Desk and Steelcase, Onyx Creative, M. Panziga Development, Pride One Corporation, Secor Law LLC, Omni Title LLC, and Thompson Hine. I'd also like to acknowledge our committee who helped put together this event, Vince Adamas, Mary Serby, Mike Dossel, Michael Deemer, Aaron Ryan, Rob Weeks, Rob Neske, and Ryan Moore. I also want to mention we do have our upcoming charity golf outing, which is Monday, September 14th at Weymouth. If you are interested in participating, please reach out to Donna Haters at Weary Associates. And just want to let you know, if you have any questions during the program, please use the chat box and Mary will read your questions as we go out throughout the program. And with that, I'd like to introduce Mary Serby as our moderator. She's Senior Director in Site Selection at Team Neo. So Mary.
Thanks, Amy. Welcome, everybody. Yeah, I'm very excited to have this panel today. We had 200 people register, so obviously this is information that a lot of people want to hear. Pleased to introduce today Terry Slabaugh. He is the Vice President of Sites and Infrastructure at Jobs Ohio. And we also have Terry Coyne, Vice Chairman of Newmark Knight Frank, and Chris Marijan, owner of Industrial Commercial Properties. I'm sure Chris Marijan and Terry Coyne are names that most of you are very familiar with. Terry Slabaugh joined Jobs Ohio, I believe, January. And so this is a name that maybe is not as familiar to you, but Terry would like to share with the group today some really exciting programs that Jobs Ohio is offering related to site development and real estate, and trying to get inventory in our markets that we do not currently have. So with that, I'm gonna let Terry go through his slide deck, and then once he's finished with that, we'll begin the question and answer portion of the panel. So Terry, take it away.
Thanks, Mary. I thought, you know, since this is about COVID, maybe start a little bit, and I know, Mary, it seems like only 6 months, but I actually had my anniversary at Jobs Ohio, I think July 29th. So time flies when we're having fun. You know, so, but you know, Jobs Ohio, we had started the year with what we were calling our 2.0 programming. We had a number of new initiatives really across the entire organization. One of the more significant initiatives was our new sites program, the Ohio Sites Inventory Program. And I think what was exciting about the program is a 5-year commitment from the board to fund the program at $50 million a year. So we went on a road show, we went on the road, we did 7 presentations around the state through March of this year, right before the pandemic. I think we had our final presentation, and we were really gearing up to do some, what I thought were gonna be some really neat things with this program. And you know, the underlying goal of the program was to I knew this would happen.
There you go.
Yeah. So I'll just ask you to jump ahead to the next slide. If we could go back one. So I'm not going to talk through these slides. If you go to our website, jobsohio.com, you go to the first pull down site inventory, it'll take you to this page and basically take you through the menu of the programs that we have at Jobs Ohio around sites. I think most of you probably know Phil Smith and Diana Reif and the great job they've done with these programs. The Site Ohio program, our property database, you know, all of the effort that Phil and our program managers put into that program, creating sites around the state. Our development programs, the Revite program, which we had the Revite pilot, about $78 million, 34 projects that was headed up by Diana Reif. We have the Revite program today that's really driven by deal making and job creation. And then we have the site inventory program, which we'll dive into today and talk about, a program that we kicked off in July, and I'll give you some background on that. We have an initiative in Southeast Ohio in the Appalachian region. It was an initiative started by Governor Kasich. We've been finishing up that program, about $15 million of spending on site development over there. When we can find a flat piece of ground, we grab it in Southeast Ohio. And then an initiative that I think is really exciting, we'll hopefully have another opportunity to talk about it, is our inclusive growth strategy. These were initiatives we started last fall when we recognized that there are a number of communities in the state that weren't a part of the economic renaissance that we were having and all of the great success we were having in Ohio. So we began to develop programs around those communities that could help those communities compete for economic development. And since the pandemic, we've stood up a couple of additional programs. So you could head into the next slide. You know, I think what's interesting about the Ohio Sites Inventory Program is the fact that, you know, up until the pandemic, this was really going to address filling the need for additional inventory in the state. We knew from reactive site searches through that process that we were only successful less than 20% of the time when we had an opportunity to react to a site search that was coming into the state. And so the concept was that this program was going to create additional inventory, both buildings and sites across the state, and put us in a better position to compete. You know, when the pandemic started in March, Jobs Ohio had to pivot very quickly. We stood up $250 million in what we called COVID-19 programming. That was a whole host of things, from giving rebates to people that were purchasing liquor through jobs, giving rebates on liquor purchases. We made guarantees to banks. We advanced loan funds out of the portfolio of loans we had with 39 companies. So we pretty much tied up with that. But something we did do in March right away is we went back to our consultants, McKinsey group, who had helped us stand up the 2.0 programs and the sites programs. And we really went back and refreshed these programs to look at what we should be doing. I'll talk a little bit about some of that today. But for the sites program specifically, I think there was a question, you know, initially with everyone pulling out of offices, the work at home phenomena that took place, what were we really going to be looking at as far as sites inventory when we came out of the pandemic? I think we came to the conclusion that we're still going to have opportunities where we would need inventory in Ohio, but we changed the focus, at least for this first year, a little bit, where we really want to try to create inventory that we felt either while it was being constructed or shortly after a project was completed, it was going to turn into jobs, payroll, and capital investment. That it had an opportunity to be a successful project and create jobs for Ohio. So that's changed our look at this program through the first round of projects, and you'll see that reflected in some of the awards, the offer letters that will begin to go out over the next several weeks, where we really are trying to create building inventory for manufacturing and logistics in the state that we think can enter the marketplace within the next 12 to 16 months. And then we do have some significant office, Class A office space buildings that we're working on in Cincinnati and Columbus, where we think there will still be demand for office space. And I was very happy yesterday to see the announcement by Amazon where they're going to begin to hire people in some pretty significant markets across the country, and that they're talking about, you know, employees going back to work in the office. So the program, as you know, is 5 years at $50 million, maximum grants of $2 million, total combination of grant and loan up to $5 million. The Jobs Ohio maximum contribution to a project would be no more than 50%. I'll talk about the $2 million grant and the combination. Hopefully we'll get some questions on that. You can go to the next slide. The way the funds are being spent is we have taken the 50 million allocation that we got for the OSIP program. 6 million of that, at least this year, will go into the inclusive growth strategy programs. 5 million has been set aside for airport development and airport economic development across the state. I can talk a little bit about that. And then we did continue our due diligence program and the authenticated sites program, and we've entered into just shy of $1 million in consulting contracts. We have somewhere in the neighborhood of 15 to 20 sites that we're working on right now across the state for authentication. I think that's an important point when you look at, you know, our emphasis right now on funding buildings, either building renovations or new building construction for logistics sites. We still, I think we have 21 authenticated sites right now on our website and for the state of Ohio. And our goal is a year from now is to double that number. We'd like to have, you know, no less than 40 and hopefully 50 authenticated sites by this time next year when you go to our webpage. Could go to the next slide. So the program, the way it was stood up is really three components, and that was kind of laid out in the funding. The site building development aspect of it for sites, buildings. We're still targeting Jobs Ohio sectors, so still the 10 sectors that Jobs Ohio operates in. Our newest sector is the military federal sector, where we're focusing on military federal installations in the state and our ability to attract more of that to Ohio. You know, reshoring and onshoring is an interesting issue. We know that Ohio is in a unique position for reshoring and onshoring. It was interesting, Moody's did a top 10 recovery list for states, the states that, you know, how they projected states would recover from the pandemic. When they had the forecast for Ohio, they had us by third quarter of 2023, they had us 39th in the nation for jobs and 21st in the nation for GDP. I mean, obviously, Jobs Ohio, we respect Moody's. We don't necessarily agree with their analysis. But I think when you look at our programs and the things that we're focused on right now, our goal with all of our programming is to achieve a top 10 recovery performance. And if we're able to do that, at least cut that 21st GDP and 39th jobs in half, it's a significant increase in jobs for the state. I think it's over 100,000 jobs by 2023. Third quarter, 4.8 billion in additional GDP and 10.4 billion in additional wages above and beyond the Moody's prediction for recovery. So we know that that's important. We have a lot of programming right now focused on the East and West Coast and business development. We know we have a lot of good things that we can say about Ohio, the way we manage the COVID crisis. We had the 12th lowest infection rate in the country. We had the 6th lowest economic exposure in the country to the virus. And we know that when we talk about the East and West Coast, the cost of living, obviously Ohio, it's the #2 most affordable state, 45 to 75% lower costs than San Francisco and New York City. Our healthcare costs are 20 to 28% lower than the coast. We have 4 of the 10 top best cities for millennials to buy homes in. So those are the kind of things in our marketing program right now that we're focused on and pushing that type of information about the state out to the coast in the US. You know, when you talk about reshoring or onshoring, there's obviously a lot of disruption in the supply chain. We've been focused on supply chain disruption in our sectors. And again, yeah, Ohio's strengths have not changed in our strengths in manufacturing, our strength in manufacturing workforce, the fact that we have the 3rd largest manufacturing workforce in the United States. All of those are things right now that we're focused on, you know, under the leadership of JP Nassif and our entire team at Jobs Ohio is to continue to highlight that and build it into our business development and our marketing program. So when you look at what we're doing with the sites program and you look at the projects that we're going to be funding through the rest of this year, it's really to position the state to have inventories for the companies that hopefully we're going to attract through those different marketing initiatives. And I would hope that Chris and Terry on this call, I mean, it's much easier to sell your state and sell a location when you're walking inside of a building and you have inventory that you can present to a client that they can immediately move into. And so that's really how we have kind of focused the program right now. Professional studies, as I mentioned, we want to continue to add authenticated sites to the authenticated site program. And then, you know, the airports in Ohio, we have, I think, 98 general aviation airports of varied sizes, but we have a great network of commercial airports in the state. And one of the things that I recognize from my past experience by running the Dayton Airport for the last 8 years is the fact that we do not really have a good inventory of aviation space, especially hangar space in the state that can take large aircraft and can do maintenance. Outside of Wilmington, where they have built a couple of large maintenance hangars, that's a real deficiency in the state. And it's not only talking about aircraft maintenance and our ability to attract aircraft maintenance to the state, but the fact that we have such a strong aerospace and aviation sector in the state, we don't have those type of facilities for additive manufacturing and the things that are happening around aerospace and aviation. While aerospace is down as a result of the pandemic, we are also home of Wright-Patt Air Force Base, largest single site employer in the state with 35,000 people located on the base there. But what's important about Wright-Patt is they are the material command center for the Air Force. They execute contracts, they buy and sell over $3.6 billion of equipment for the Air Force. And it's also where a lot of their design work is done for the Air Force for products of the future for the military and outfitting the military. So being able to have infrastructure around airports that can attract companies that are doing business in the Air Force lane is one of the reasons that we have that focus on airports specifically. You could go to the next slide. So I think hopefully by now people have become familiar with the requirements of the program. Again, I'm not going to spend a lot of time on this. I think I've talked about, you know, what our short-term priorities are. I think what has become exciting about the program for me is the fact that we're seeing so much equity and private investment in the marketplace. If you go to the next couple of slides. So we have, today we have 75 applications. I think, checked this morning, we might have had 76. Again, the Northeast, the Cleveland market and Northeast Ohio is our strongest market and strongest response to the program. I would expect that with the excellent work that Team NEO, the work that Mary, Christine Nelson and Bryce Sylvester have been doing really for the last year that I have worked with them. They have focused a lot on this program. It didn't surprise me that we got the volume of applications from Northeast Ohio, but it also didn't surprise me because of just how strong the economy is in the Northeast, especially around manufacturing. Historically, you know, the Northeast region, the region represented by Team NEO, has accounted for about 40% of the deal making at Jobs Ohio, and I think similar number for the job creation that we do every year. So we're seeing great response out of the Northeast, and what has been exciting for me is I think, and Mary will agree, that we're finally going to create some inventory that the Northeast is needed. We're hopefully by the end of this year, we'll have almost a little over 1 million square feet of existing buildings for manufacturing logistics that we'll have in the program. I'm excited about that. But then also, again, I can't underemphasize the amount of equity and private investment that I see going into real estate right now, into the lanes that, you know, we wanted to go in. The next slide just kind of shows where we're at with the program. I mentioned, I think we take our first offer letters through tomorrow for approval, so hopefully those will go out in the mail next week. We have 9 projects right now that we're pushing ahead for offer letters. We hope to have offer letters out on all 9 of those projects by the end of this month. And then what we're establishing is really, you know, continuing this pattern of trying to push out, you know, half a dozen to a dozen projects every 30 to 40 days until we spend this year, and then we'll be for this budget season, then we'll begin to tee up projects for the next budget season. I'm going to stop there and give it back to Mary.
Thank you so much, Terry. Great information. Obviously, as most of you know, the pent-up demand here in Northeast Ohio was very significant. And so we're really excited to be working with so many of you on bringing new inventory to the market. So keep them coming, call us, check in with us. And as Terry mentioned, all that information is available on the website and the guidelines of the programs. And so appreciate you sharing all that information with you. So we will get on to our panel discussion. We've got Chris Samarijan and Terry Coyne who are now joining us as well. Chris and Terry, Chris, if you could just give us a quick commercial of yourself and your background in real estate, and then we will push it over to Terry, and then we'll jump into some questions.
Sure. Part of a company called Industrial Commercial Properties. We own over 40 million square feet in 4 states. Primary business is industrial, probably 90% of the portfolio is industrial, with the balance being office. And we're really, really good and proficient on the conversion side, where we take something a little older, a little bigger, and turn it into something shiny and new. But we've been expanding into ground up build-to-suits and some other classes of product that seem to help to round out our market position.
Thank you, Chris. And Terry?
I'm Terry Coyne. I'm with a company called Newmark Knight Frank, specialized in industrial real estate brokerage and new development, covering from here now. We just expanded into Columbus.
Very good. And to say these 2 gentlemen are busy is quite the understatement. So thank you all for giving your time, Terry Slabaugh, you included. So we will go ahead and jump into the questions. Again, if anyone who's listening has any questions, please use the chat function and we will try and get those answered as well. So first question, Chris, I'm going to hand it to you. Looking at where we are in this pandemic and COVID, how can you talk about how this has affected your deal flow? You know, what have been the biggest challenges and what have been some of the highlights that you've seen?
Sure. Thanks, Mary. First of all, it's accelerated our business. Historically, we do 10 to 12 acquisitions a year. We've concluded 10 already. as of the end of July, and I think we have 14 more under contract. So I think the shakeup kind of created a little more need, and I don't want to call it dependency, but some of the corporations that might have thought that they can handle things on their own, and I don't want to call it corporate arrogance, but just kind of like, money was cheap, money was available, and there was a little clearer heading. Now they're looking outside for some assistance. So I think that's spurred quite a bit. Obviously, the reshoring piece, we haven't seen a ton of that yet coming back. It feels a hair premature, but candidly, we're seeing a lot of e-commerce growth. We're seeing last mile facilities popping up way beyond our imagination. And even on the office side, Mary, right now we have 3 major transactions: 175,000 square foot corporate headquarters, a 70,000 square foot corporate headquarters, and a 135, call it, significant operation down south in the Dayton area that we're working on and hope to conclude in this next quarter, all 3. So even the office market, where I think a lot of people have paused and used COVID, I don't want to say as an excuse, but just to kind of hit the brakes, we're even seeing some people come through and conclude on that. So
That's great.
It's been really strong for us. I think the banks have gotten more tentative. We're still getting really good loans. Rates are extremely good, but overall, when things get skittish, the banks, they pull in first.
Right.
So we got to keep the money flow, I think, to keep the economy rolling. So I think Terry's program is extremely helpful at a time that they probably didn't even foresee when they were putting this thing together. And
Right.
obviously, Team Neo's done a fantastic job, Mary. Thank you.
Thanks, Chris. Hey, Terry, anything you can add? I know that Busy is your middle name, maybe your first name these days, but anything you can add to that?
I think Chris is a leading indicator. The industrial market has a vacancy rate that just continues to go down. Interesting statistic, Amazon in our market is in 6.5 million square feet, just in the Cleveland market. And the vacancy rate has gone down because of them and in addition to them. But everything comes from a warehouse now when you click Amazon or something on the internet, and the warehouses are just getting full. If you've got modern, you've got new, you're full. And we just did a deal in an old building, 40-year-old building, and our lease rate approached $5 a foot net. So you're seeing huge inflation in rents, low vacancies, and tremendous demand that doesn't seem to be subsiding. If not, it'll be increasing.
Yeah, it's great. And I think, that's where we have been looking in Northeast Ohio. Anything that was standing as spec is now gone, and Amazon is the culprit of taking down some of that square footage. And so, Chris, I think you mentioned it, the OSIP program was rolled out pre-COVID, and we never knew how much we were going to need it. And I think the time is absolutely right to get this new inventory on the market. So thank you. Terry, anything else to add? Terry Slava, anything to add to their comments on that?
I just have to, squeeze as many deals out of that money as I can, Chris and Terry. So just remember that when we have our swords out.
Spread it around, Terry.
Right. But we get it. I mean, it's like I said, it's been a great so far, and we're only into the first few deals. But just think, if we could do, a couple of dozen deals a year, put 3 million square feet out there, at the end of 5 years, that could be a much different landscape for Ohio when we talk about attraction. Because you guys both know, when somebody comes in, they're usually in a hurry. They're usually don't want to hear about a site situation. When we get those opportunities out of state, they want to stand in a building and imagine themselves in it. So if we can take advantage of this opportunity we have right now, to create some, create some of those opportunities, that's kind of what we're focused on. And I'm sure you're seeing the same thing.
Yeah, and I think that's what, the old story of the chicken or the egg, and that's where we were. And a lot of times in the previous programs of Jobs Ohio has been needing an end user, and the beauty of this program is not needing to identify that end user, but having that product. So when the project comes along, we've got something to give them. So,
Mary, the other thing we need to be careful about, I think, a lot of these larger spec industrial buildings historically have been built on relatively tight sites because the developers want to kind of pack in as much square footage. even with the last mile or the regional distribution centers, everybody's looking for more trailer parking. I can't tell you how many paved lots that we own based on our facilities. We're leasing our lots for as much as we're leasing our buildings for. So the one thing I would encourage for even other developers is to look at a little more site, because I think that infrastructure is going to help define whether they're a long-term site or a shorter-term site. People really don't want to split operations. So I think bigger sites are important. And I think even on the manufacturing side, even though we've, in Youngstown, Warren, we bought a 1.3 million square foot building and an 800,000 square foot building. And although we did 5 distribution deals, we did 2 major manufacturing transactions. So, it's not all about logistics, guys. I mean, that's huge. Everybody's gravitating towards it. It's a very identified, call it commodity, but the manufacturers of the world need the infrastructure too. And, rail, power, water. We saw 2 Korean companies come in the last 3 weeks, totally different companies coming through. It's just, so I think, Terry, going back to your point of having, doing 3 million square feet, I think deals beget deals. And if Ohio's always been a pretty good deal state, but you'll really take it over the top. And, we keep our tax structure in line. I think we're in a pretty decent place there. I think sky's the limit.
Yeah, and that was kind of leads into another question of just asking about how are companies reevaluating amount of square footage they're needing, given COVID and the post-COVID world. And maybe Terry, coin for you for this one, industrial and both office. And can you talk about what you're seeing in both those markets?
Yeah, I agree with Chris. I've actually done a couple of reshoring deals. I'm here in Ashland, just giving a plug for a building that I have, but there's a huge building in Ashland that I'm sitting in the parking lot of waiting for a showing at 1 o'clock. And it is for an out-of-town manufacturing company that is a complete reshoring transaction. It's actually a distribution building. But I think you're going to see more reshoring. I've already done 3 deals in our market that were completely manufacturing reshoring. I agree with Samaritan when he says the rail. I didn't do a rail deal for 10 years, and I've already done 2 this year. So rail was always going to be what changed the world, and Walmart forced their vendors to use it, but it never happened, and now you're seeing more of it. But I think overall the demand, whether it's high ceiling or low ceiling, you're seeing inflation and everything just because there's so little product. On the office side, I think Chris bought some properties in Kettering that were suburban office. I think the smartest guys in the room may look back in 10 years and say buying suburban office was the way to go, because it's such a bad market right now and the prices are so low, but people are still going to go to offices. Verizon came out and said that they did the home at work thing for a while. And now, rather than going and staying at home, they're actually increasing the square footage for their employees from 125 square feet to 300 square feet. So I think the work at home thing kills the 25-year-old. I learned so much when I was early in my career, sitting and listening to older guys who would share stuff with me. And I think that's a piece that people are going to realize you have to be in the office to get training that you didn't realize you were getting.
Yeah. And I guess to that point, I mean, some of what we've heard is the needing to go back to the office, but now the footprint of what each employee needs is going to be bigger. So, we went from everyone had offices to the open space, and now back to we needed more space to spread people out to be safe. So are you seeing that with existing office buildings and how those may be able to get retrofitted to meet the demands in the post-COVID? I guess either
on our office side. Yeah. I mean, I think you're going to clearly see more square footage going to people. And, the big thing that people are asking now is what's your MERV rating? I didn't know how to spell MERV 120 days ago. And now everyone wants to know what's your MERV rating. So I think you're going to see increase in capacity, increase in your filtration in your building. But I don't think it goes away. I don't think office goes away.
Samaritan, anything to add?
No, I agree with everything Terry said. He's right on. And I just don't think it's practical. And I don't think the country is set up to work from home. I think, Zoom's a great bridge. It works real well. The Europeans, they've been working here for a while. They get it. But, there's nothing like getting up, getting charged up, going to the office and getting that energy. And I think we can survive the other way. I just don't think that as a country, we'll figure this thing out. It might take another 12 or 24 months, but we'll figure it out.
It may have been a little bit of a luxury at first, and now everyone's ready to get out of their spare bedrooms. Terry Slayball, we have a question from an anonymous attendee asking, how is Jobs Ohio doing this exactly? So maybe you'd like to talk about how Jobs Ohio is funded, and given even other states' budgets in this COVID world, of how Jobs Ohio is able to fund programs.
And that's a great question. And, Ohio, I mean, that's the other strength we have, that uh, is the way we're funded, and the fact that our funding is secure. It's not affected by other things that are happening in the state with the state budget. But about, I guess, 8 years ago, Jobs Ohio entered into a lease with the state. We leased the spirits business from the state of Ohio. So we have another companion organization called Job. They operate the liquor business for the state. It's about a $1.3 billion a year enterprise that we operate. We have 2 warehouses that we operate the liquor business out of. That $1.3 billion, a little over half of it goes to pay debt on the financing we did when we leased that business from the state. We have profit sharing with the state. We pay taxes on everything we do. I think our profit sharing annually is in the neighborhood of 70 million to the state of Ohio. But more importantly, we have I think about $300 million this year in programming for Jobs Ohio. So we have our traditional, what we called our 1.0 incentive programs. We fund that at about $150 million a year. And then we have these new programs like the SITES programs, talent. You've heard about our innovation program. We just stood up our first innovation district with the University of Cincinnati Children's Hospital earlier this year. That's part of our new menu of programs. That's about $150 million. So while a lot of businesses were affected this year very negatively by the pandemic, the liquor business, we actually, I think our revenues this year are up about 18% year over year, and we've been able to maintain that business even though a lot of the bar and restaurant trade was closed. And still a lot of them are still closed, and frankly, those have probably been the largest business failures in the state. But that arrangement provides us with secure funding. We have a 20-year agreement with the state for that arrangement, and as I said, we're about 7 or 8 years into it.
It's great. It's a dedicated funding stream, which, unlike a lot of other states, their economic development funds come out of the general funds, and so it's been a unique way to stand up Jobs Ohio, and it's been very successful. So thanks for that. Terry Coyne, wanted to see what your thoughts are on cold storage and freezer space. We at Team NEO are hearing a lot about that. Again, chicken or the egg, knowing that they're very expensive facilities to build. What are you seeing in that sector, and maybe reuse of existing structure being, or new complete construction?
I've only done 2 deals of those in my life. One was in, I think actually a building that Chris now owns out in North Jackson. That was a freezer that we tore apart, and the day we tore it apart, the whole world wanted it. But I just did a deal in Massillon with Americold, and they renewed. And I will say, if they hadn't renewed, you would have seen lease rates that were $11, $12 a foot, if not more. It cost you $300 a foot to build it. And what we had was a building that was 30, 40 years old. And we had tremendous demand, and we ended up not getting the greatest lease rate because they had an option to renew at a certain specified price. But if they hadn't gotten it, the interest was regional and national. It was not local. The demand was overwhelming, and the lease rates were really high. Do I think someone's going to build a spec freezer building? I don't think anyone's going to do that anytime soon. But clearly, if you have it, there's high demand.
Samaritan, anything to add? Seeing the same thing? Or?
He's right on. I mean, it's too risky to build on spec, but I think the marketplace could use it. I think some of the freezer cooler space in the market's been completely renovated, but that being said, sites might be restricted, so they can't park enough trailers. The mechanicals are very expensive. So it's not really an easy retrofit. We own a freezer cooler down in Xenia outside of Dayton. That's fully leased at this point. But it's a tough one, and there's only so many built in the state. You could probably count all the freezer coolers on a hand and a half maybe. So there's just not that many of them out there. But hey, listen, I mean, I think at some point somebody's going to have to jump in, whether it's a user that builds one for themselves or somebody having the guts. But I think ultimately the market will demand. But there's so much action in our normal business right now, in the general industrial business, you really don't need to take the risk. So,
Right. All right. Another question, Chris Mergen, I'll let you take this. What kind of lease rate differentials are company willing to pay in Northeast Ohio for new product versus existing older inventory? And then have you seen a big change from kind of Q1 2020 till current day?
first part of your question, pre-COVID, I would have said you're probably $1.50 to $2 a foot delta between a state-of-the-art building and what I call a general market building. Now, up in the Northeast, our general market building might have been 20 foot clear. As you get down to Columbus, that would be probably 24 clear. Cincinnati's kind of a blend of both, I think. So I think if you get into the more commodity-oriented markets like Columbus, or to some degree like Northern Kentucky, Cincinnati, where you have a lot of institutional developers building big bulk product, I think the gap was probably a little different. It was a little tighter. But when you get up north of Columbus in the Northeast, I think you'd see at least $1.50 to $2. I think ceiling height, dock court, loading courts, land, those are all in cleanliness. I mean, most of the buildings we're buying now, we're doing a complete renovation, sprinkler, lighting, heating, paving. People are willing to pay, like Terry said earlier. I mean, he did a 40-year-old building almost at $5. I mean, that would have been unheard of 2 years ago. It would have been more towards maybe $3.50, maybe pushing $4. So as there are barriers to entry in tighter markets, you will see maybe a little closer play there. And not everybody's set up for a build-to-suit either. So you'll even see Amazon taking in certain markets, they'll take existing product versus doing a build-to-suit. So it just really depends.
Yeah, I will say a great example is Chris has got a building in Bedford on Rockside Road, an old Kmart. And I think your asking price is like $450 or $475 triple net. And the days of buying buildings for 10 or 20 bucks a foot are gone. You can't buy buildings for 10 or 20. The most recent count was 35 bucks a foot in Maple Heights. So there's been tremendous price inflation. And if you can get new construction at $6 or $650, but old buildings are $450 or $5, I mean, it's not. I don't think the delta is $2. I think the delta may only be $1 or $1.50, and that's a function of availability.
That's great. Good to hear.
We've got a question from one of our participants, Suzanne Hamilton. How are you and your clients finding financing for projects ongoing, especially since your volume has picked up? I don't know if anybody wants to take that one.
Terry, you want to talk about that, or you want?
You want me to talk
I can
about
tell you, on the spec side, I can tell
money?
you the loan to value has gone down. It used to be 75% loan to value for a spec, and now it's 65%. So that's been the biggest difference. So it requires a lot more equity.
Right. I think, our loan program, our loans, JO loans at 2% were a deal. I think now, the situation has changed. To Terry's point, there's more equity. Equity is what's going to drive your commercial lending, but the bar is different right now because of where the interest rates are. So it's changing the appraisals and everything. And so I think what we're wrestling with at Jobs Ohio is how much equity what does Jobs Ohio need to put in to drive the deal? How much equity should the builder have in? And that's all free flowing right now with what the banks are currently doing. And I think the big news is it doesn't look like the Federal Reserve has any intention anytime soon of raising interest rates. So that's, that condition is gonna continue for a while. But great opportunity right now because, I mean, from where I sit and the deals that we've seen in the volume, there is a lot of equity and commercial lending going on. Maybe maybe some of the parameters have changed, but it seems like there's a lot of access right now for projects.
Yeah, I think from our perspective on our deal flow, we probably have to work a little harder right now, not just because of the amount of deals we're doing, but I think some banks are a little tentative. Like, you know, pre-COVID, we could have got a spec building completely empty, financed, you know, 75, almost 80%. You know, today we might get to 50 or 60%. On our lease transactions, buildings that we have leased, we have no issue. But, you know, I mean, lenders are just, they want the income in place if they can have it. They kind of just took a step back. I think it's going to change as we figure out what's happening with COVID, especially since we can show the track of leasing so much space in a national crisis. We're pounding it out like we were when the economy was just full bore. So I feel good about the end result. I think the banks are going to ebb and flow a little bit. But that's my opinion.
Thank you. Terry Coyne, I'll give you this question. I know your clients are on your heels, so we'll try and get you a couple more questions before you have to jump off. Have you done any virtual site visits with potential tenants during this COVID time? And, you know, how have they gone? What's gone well? What maybe hasn't gone so well?
Yeah, no, we absolutely do. And we're making it so that we have lock boxes in buildings and people can get in if they need on short notice. But I did a big tour for some investors, 10 people on a Zoom call, which was incredibly efficient. No one flew in, and they all looked at it. So yeah, that's clearly the virtual tours, the drones, the FaceTimes. No, absolutely, 100%.
Chris Mergen, anything? You guys done those yet?
You know, we've done what Terry said. I mean, as far as letting people in, social distancing, we've practiced that quite a bit, even though I think that's starting to, I mean, these, you know, industrial folks don't seem to be as sensitive to it as others.
Right.
But that being said, we have not done any what I call video tours or anything like that. Everybody's been on the ground. And by the way, our construction folks all the way through just, you know, kept things going, thank God, because, you know, Michigan, Michigan, they actually put the brakes on, which really hurt in a couple projects.
So did New York.
Yeah. But Ohio all the way through, which I think really helped keep the economy going.
Thank you. All right, I have a couple more questions going to go through. One was about opportunity zones. So I'm not sure if any of you have worked any projects in opportunity zones. Have that been, you know, a positive driver of deals? Anyone worked on any opportunity zone projects?
We did one in Bedford Heights. The old Mr. Coffee site is an opportunity zone. It was going to be 2 buildings for spec, and it became one with an enormous parking lot for a last mile Amazon. I'm working on another one right now in Bedford Heights, and I'm working on one in Cleveland. I think it's a great program. I don't know if it took off as much as everyone had hoped. I hope they give an extension on the program or move the date that you got to pay the taxes. But I think it's a very good program that probably was impacted by the coronavirus.
Chris, have you guys worked on any?
We own 3. It wasn't the reason for getting involved. I think it's a nice, you know, call it cherry on top. You know, we're just pretty basic industrial folks from that perspective. And we're not sure, we don't want to be constrained on whether we typically hold assets, but we don't want to be hamstrung. We do have somebody looking at one of our sites that was an, you know, opportunity zone fund. I think that's more benefit for them than it might be for us. It's nice. Candidly, some of the spots, I don't know how, I would hope that maybe even the geography morphs a little bit, because where their lines are don't quite make a lot of sense. We own a major site, the former City View site in Garfield Heights. The north side of the highway of 480 is an opportunity zone, and the south side isn't. I just find it a little unusual, but so hopefully that modifies a little bit. But I think any national or state program is well appreciated. Anything we can get, we'll take.
Terry Slaybaugh, this one will be for you. I think it may be appropriate given some of the programs that are coming through Jobs Ohio, and anybody who wants to jump into this. Can you speak to diversity and inclusion trends in the industry? Was one of the questions from our attendees.
Well, I talked a little bit earlier about the inclusion programs that Jobs Ohio has stood up. The vibrancy program that will be rolling out the end of this month. I kind of describe that as kind of like a Main Street program. We've identified 98 cities in the state. If you go to our website, all of that information's on there right now. We'll make up to $2 million grants in that program, really to the concept of the program is that you have communities that cannot attract big economic development projects. They can't attract developers like Chris to come in and do stuff, and to try to create amenities in that community that can then attract economic development. So more looking at doing mixed use, kind of Main Street type development, probably mix of retail. We require a component of one of our 10 sectors in there, so probably office space that ties into one of those sectors, and then it can have a component of housing to make it work. But really looking at, can we create a catalytic project that then spurs other economic development in a downtown of a small city. I think the most exciting program we've stood up, and this came up in May, this program I think was a big shift for Jobs Ohio, is a program aimed at companies that are not a flight risk, companies that have less than $2 million a year in revenue. We don't have a job requirement. We don't even have a job creation requirement for it. It's a small incentive program, up to a $50,000 grant. The companies do have to be in one of our sectors. I was kind of pushed back on the 50,000. I didn't think that, would be significant, and have been very surprised at how successful the program has been. I think we've done 10 different projects through that program with quite a bit of leverage of private investment. The program is geared towards disadvantaged populations. So it's to qualify for the program, if you're a minority, woman-owned, veteran-owned, or disabled-owned, person-owned business, you qualify. And then we've also have a geographic qualification by zip code, where if you're in a distressed area, and that's also on our website, you can punch in your zip code and immediately know if you're eligible for the program. That's another way you can become eligible for the program. But I'm excited about that program because it's reaching a lot of the companies that we normally would not do business with at Jobs Ohio because they're not a flight risk or in one of our sectors. So that has been a great program for us to stand up. We also did some lending programs early on in the pandemic. We did a $50 million guarantee, loan guarantee program with 2 community banks. They could then take that and do an additional 10% lending to their existing customers. So we know we reached a lot of companies through that program we normally wouldn't have done business with. So I think there will be more of that from Jobs Ohio. We know that if we can attack the disparities that are out there in the different populations, disadvantaged populations in the state, it only makes the state stronger. It gives us a larger workforce. It gives us a larger area of the state that we can then do business in. So I think you'll hear more from us, especially on the lending side. How can we make more capital available to minority-owned, women-owned businesses, across the state?
Oh, it's great. And, we kind of look at it as Jobs Ohio 2.0 because, some of the previous programs were, exactly what they were. And looking into this new arena of support, I think it's been great. So I'd say to anybody, listeners out there, just check into Jobs Ohio's website, contact Team NEO throughout our 18 counties, and we'd be happy to talk through to see if they're eligible for those programs.
And I think, Mary, we can't lose sight. It's been a lot of positive talk on this call today, but we had more people lose their employment during this pandemic than jobs, than people that got jobs for the last 5 or 6 years. We know 1 million people were displaced. There's 2 million jobs still at risk. 85% of the displaced workers have less than a college education. We know that STEM jobs were the least impacted jobs in the state. So the other thing you're going to see from Jobs Ohio within the next month is a concept we're calling transition hubs, probably have a different name by the time we stand it up. And I think we'll be doing it up in the Northeast first, but really to go after the retraining, reskilling of our workforce. Because if we know we're going to onshore and reshore, we know we have a number of people that came out of retail, they came out of the food industry. Those are the people that we have to somehow get back into the workforce. So that's another, it's not, you know, specifically inclusion, but obviously the most important thing we're doing at Jobs Ohio, every program dollar we look at is what are we doing now to raise the curve, and that, you know, getting people back to work in the state. So that's, you know, I think we can't lose sight. There's a lot of pain going on with a lot of families across the state, and obviously, like I said, at Jobs Ohio, that's one of our primary focuses right now, is how to get people into the workforce.
Perfect. Thanks, Terry. More to come. All right, Terry Coyne, you're about out the door, so we're going to ask you if you had a crystal ball. Where do you see Northeast Ohio in 2021, you know, and beyond, in our competitiveness to relative states around us?
I think that manufacturing is coming back, and I think we manufacture stuff in the Midwest on the Rust Belt, so I think we're in good position there. We're always going to be a local, if not regional, distribution center. That's strong, but we'll never be national, so that'll be good. I think lease rates are going up. I think the one thing that people are waking up to is land prices have gone through the roof. So I think that's the thing that maybe 2021 people realize that 65 an acre land price doesn't exist anymore unless you're in Valley City. But you know, your land prices are now in the 200 to 250 an acre range. So I think that's the big thing you'll see in 2021.
That's a big change. I mean, we've got some of our rural areas that are still at, you know, 30,000, 40,000 an acre, but then you're talking about no infrastructure, you know, the infrastructure needs to be built. And so I think a lot of that is, you know, how do you balance those costs? So that's an interesting point. Chris, anything to add to that crystal ball vision?
I think he's spot on.
Yeah. And I think, you know, we always compete against the Michigans, the Indianas, you know, the southern states, obviously, and, you know, land is a big thing. So, I mean, when we look at these big Toyota deals and BMW deals and these huge facilities, and I think, Chris, you brought it up with just the amount of concrete that's required just to get these trucks in and out of there, it's going to be significant. So it is interesting with rail. I think, Terry Coyne, you mentioned that. I mean, we had years past where we had rail every project all the time and then nothing, and now it's back. So I mean, for the users, they need it. It's not a if when. So I know we're looking at sites that had previously been served. You know, what does it take to get it reactivated? So working with our railroad partners on that. So you know, I think we've had a great conversation here. We're coming right up against time. I think there were a couple questions we didn't really get to. One of the questions we had was about comparing us to maybe Columbus or other areas. Our cost per square foot seemed to be higher over the years with new construction. I think some of that lent itself to the size of it. But the comment here is maybe that we're lagging behind in actually that delivery of that product. I don't know if anybody's got any perspective on that in Ohio, Northeast Ohio, compared to other areas of getting that product actually online.
I think, Mary, the whole issue is there's just so many large institutional investors in Columbus and Cincinnati that those are spec builders. I mean, even now in Dayton, Terry Slaybaugh was instrumental in bringing in a big national development group into the Dayton International Airport area. I mean, Dayton didn't have any big spec products since the Miller-Valentine days. So Columbus has always had it. Cincinnati / Northern Kentucky has had it. Cleveland, it's been more from a local development perspective. But as some of these big boxes came in, you know, it made sense to start doing some spec because they were gobbling it up, but relatively no spec in Northeastern. I mean, relatively. I mean, I'm not, right. There's a fair amount planned. There are occasionally a few buildings. So I also think the national developers, their cap rates are much less. They're getting money much cheaper. They actually have to put the money out. So it's not like a local developer who could make a good, call it a return recommendation or decision. The national guys need to pump it out like a machine. So they're going to keep rates low that way. So I think if you go to Columbus right now and look for a Class A new building, you know, you might be 4.25. You know, in Cleveland, ask Terry. I mean, you're 550 to 6.25. Go to Detroit and they're doing deals up as high as over $7. So it's all the Midwest, right? But little different construction, little different land, and a lot different cap rate. I think cap rate is probably the biggest differentiator. The risk in Detroit, maybe the cost of the building there. You know, Cleveland might be a little more expensive to build and a little more barrier to entry on the land, right? I mean, our land sites are a little different than Columbus and especially in Northern Kentucky. But, you know, overall, I think that the greater Cleveland area is much more balanced. I like having manufacturing. I like having some office. I like having some distribution. I think that's why Cincinnati historically has done so well too, because they have both. Columbus feels a little more office and distribution to me, and you know I could be way off, but that's my view.
Thank you. And we may have lost Terry to his site visit, but that is the time that we right. I really, really appreciate the candor, everyone's conversation. I think we hit a lot of great topics, and we are out of time. And so hopefully all of you listening enjoyed it. Amy, I'm not sure if we have any closing remarks, but thank you to NAIOP for making this possible. And thank you to Chris, Terry, giving your time for this. And we really appreciate your insights.
Thanks for inviting us.
Yeah.
Thanks.
Terry, Amy, Vince, appreciate it, guys.
All right.
Terry Slaybaugh.
Thanks, everyone.
We'll see you, Chris.
All right. Bye-bye.
Bye.